Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services, and Mohit Gang, Founder and CEO at Moneyfront. Thank you for joining us here on News 9, gentlemen. Season greetings to you, your families, and your team. Gaurang, I'll start with you first. I mean, final week of FY24, and quite a year it has been for our markets. What were the highlights for you for this year, both positively and negatively, sir?
Thank you, Suyash, and colorful greetings to you, your entire team, and all your viewers from myself and my company, Geojit Financial Services. Eventful, yes, it has been. Geopolitical situation has been at the forefront. Along with that, disruption in the global supply. Yesterday or day before, we had Ukraine attacking Russia's oil refining capabilities and capacities that made crude oil bounce to more than higher level of comfort zone. And my sense is that, despite all the negativities, Suyash, we have been able to maintain ourselves on the positive side, and we've been able to recoup from all those global and local negativities which impact economy and stock markets. So it's good to see this positivity and strength and capability to bounce back from any kind of external or internal negative impact. Short week, as you rightly mentioned, but it's going to be a powerful, power-packed week because of the weekly and monthly expiry on the F&O front. And I guess starting second weekend or possibly first or second week of April 2024, next month, we will have the fourth and the final quarter earnings for this financial year. Let's hope there is a better story over there and a better color to see in terms of progress that we make. And overall, I think this choppiness and volatility is going to be there till the time we see elections done and dusted, which is the second longest one post-independent India.
Right, but Mohit, I'll come to you now. The earnings season is also upon us, and the first in the pipeline, as always, will be the IT companies. And they have had a tough time, last week. The trigger, of course, was that Accenture downgrade that happened. They have downgraded their forecast. And the last time that I remember it happened, it was, bad news for the IT companies. Now, we have already seen a knee-jerk reaction on Friday. Is the pain likely to continue? And more importantly, what are your expectations from the Q4 print of the bellwether IT companies, Mohit?
Hi, Suyash and Amit. Always a pleasure to be on the show. Wish you and everyone of your viewers a very, very happy Holi. And we are nearing the end of this financial year, which has been a fantastic financial year for the stock market participants and for everyone who has participated in the equity markets in India. On the IT front, Suyash, honestly, I think Accenture guidance came out of the blue. Market wasn't expecting or anticipating this kind of a harsh guidance. They've cut the guidance very sharply, only 1 to 3% growth as compared to a 2 to 5% which was projected earlier. And the reasons which they've cited is global uncertainty and perhaps clients' demands not picking up and so on and so forth, which doesn't augur well for the bellwether IT stocks. And markets have already taken that into cognizance. The IT index is down almost 3.5% since the time the Accenture news came in. Prior to that, if you see last year, IT stock was actually one of the big laggards, in fact, for last 2 years. And only for last 3-6 months, IT stock, IT index was actually picking up some steam, right? Which was more in anticipation of rate cuts coming into US sooner than what markets was expecting. There was an anticipation that the IT demand will pick up with the yields easing off. There was also an anticipation that IT companies have already bottomed out, and perhaps the worst was already in the pricing. With the Accenture guidance coming out, I think that fear has already again popped out of the can. To my mind, only the earnings season and the kind of earnings which domestic Indian companies will post out will assuage investors' fear out there. My sense is earnings on the Indian IT pack won't be as bad as the Accenture earnings forecast which came out in the US. To be honest, I think a few of the bigger IT companies have already baked in the worst of the scenarios last year and couple of quarters back. And my sense is the season this time will be more centered around some big deal announcements, some vertical expansions of these companies, so on and so forth. So I am not as bearish on the entire IT pack as it looks like. I think the worst has already been taken into account. The pack has been hammered. For value investors out there, for someone who really wants to take a slightly longish view, look, it's not a bet for another 3 months or 6 months. It's a bet for another year or two. If one is willing to put out money, I think they're all very reasonable priced. And I've often said in your show, these are very good allocators of capital, all these IT companies, and they have the wherewithal to fight the tide, right? So my sense is the pack should pick up. The earning season should not be as bad as what has come out in the Accenture guidance, and that should be a bit of a positive surprise for the market.
All right. I mean, Gaurang, Mohit over here is expecting a slightly better quarter for the IT companies. It looks like he's saying that the worst is over. And I mean, we were reading about a lot of commentaries, brokerage commentaries. FY24 was pretty much declared to be a washout year. FY25, at least from what we are hearing from Accenture, it looks like, that difficulty is going to persist from here on. But I mean, the valuations, sir, they ought to be looking compelling at this point.
So Suyash, I think as a brokerage house, we at Geojit have been positive on IT for a pretty long time. Even last 2 years, if you go to see when a lot of participants in the market were underweight on IT, we remained positive. See, short-term issues with respect to local and global events unfolding will have its impact on any sector, let's face it. Why only IT? But does that mean that you have to change your entire theory of long-term investment? In case if you have IT stocks in your portfolio, then we don't think it is warranted. And in fact, we had given out an add and accumulate call to all our investors who had invested in IT at higher levels to get into IT stocks likes of TCS, Infosys, HCL Tech, Tech Mahindra, LTI Mindtree, Cyient Limited, KPIT Tech, Tata LXI, to name a few. And from those levels, I think they have done reasonably well in case if you would have gotten at those levels, or you would have averaged in case if you bought it at higher levels. Then fourth quarter historically, is a little bit of mixed bag. Not that third quarter was not, because in third quarter we also saw some of the mid-cap ITs which were otherwise giving stellar performance compared to large-cap IT names did underperform. So it's, seasonality, I would say. If you don't have 3 months, 6 months kind of time horizon, I think even after the kind of recovery that we've seen in some of the IT stocks, it still warrants a second look and an investment. And I'm sure that this global headwinds that we talk about in terms of budgetary cuts, discretionary spends, will definitely be a thing of past, because in today's complex world, Suyash, the kind of cyber security you need, you can't stay away from upgrading your IT platform.
All right, that's the word coming in on IT companies. Both our guests expect, bullishness to set in for the IT companies. Maybe the worst is over. Q4 may be tough. Seasonality impact could be there. We have a lot going in the markets. We are coming back after a long weekend. And, it was not just Holi. The IPL season is back. And Amit, I know you're a big fan of cricket. Me, not so much. But I was, watching one of these matches, and they have that, viewership number. 16 crore people were watching IPL at one point in time. I mean, that's about 10% of the entire population, right?
The numbers are huge. IPL is back, and the numbers have gone through the roof. They have not just surged. 51% jump in the first day viewership of Jio Cinema digital platform. 59 crore video views on the platform on the very first day. 660 crore minutes of video time on the digital platform witnessed on the very first game between the teams of Dhoni and Virat Kohli.
That's just one match.
That's just one match. I'm talking about the first match. On the very first night, the platform has the free play and win, predict and win sort of a game. And there was a viewer on the very first night won gold of 50 lakhs. Gold worth 50 lakhs of rupees. If I can throw that question on to Mohit. Mohit, if you are still there.
I'm there pretty much.
Yeah. Good morning, Mohit. So this is a time when most companies open their purses when it comes to their marketing and advertising spends. which are the sectors you predict will be the biggest gainers from this IPL season, considering that this time the elections are also, election season is also going on simultaneously?
Thank you, Amit. Look, I think IPL, if not the biggest, is one of the biggest religions in India, honestly. And I think the cricket fever is too huge that you and I can possibly assess on this show itself. My sense is IPL is going into the footsteps of English Premier League or the NFL League in US, and pretty soon we will see, if not maybe. I think next 2, 3, 5 years is when we will see IPL surging past one of these leagues, which are perhaps the biggest and most iconic globally, right? With a valuation of almost 10 to 11 billion, this IPL is supposed to surpass all records, as you rightly pointed out, Amit. There are many sectors, there are many things at play when you call of an event of such large scale, which will span almost across 3 odd months, right? And this is a record season, the longest ever, because of elections also coming in. Overall, the combined impact of elections and IPL, my sense is, will give a massive boost to consumption across the length and breadth of the country. Honestly, sectors which will see positive impact, I think perhaps are FMCG companies, the larger players out here like the Livers and the ITCs of the world. Even the smaller QSR companies should see some demand pick up out there. Companies like Varun Beverages and all those stocks which are perhaps listed plays on cold drinks and mineral water and so on and so forth. I think those are all, and there are multiple of such plays which are out there. I also find the listed IPL space very attractive, Suyash and Amit, which is very limited in India. You have only 3 listed plays. You had India Cements before, but it's now no longer listed, as in the Chennai Super Kings franchise has been removed from that. But there are 3 listed plays in the country right now. You have the Royal Challengers Bangalore franchise, which is United Breweries. You have Sun TV, which owns Sunrisers Hyderabad, and you have RPSG Group, which owns Lucknow Super Giants. So my sense is these three are very interesting play, and if one has to actually track the significance of IPL growing in this country, you have to track through these 3 stocks. Though it's not a complete play, but yeah, in a very large way, these are 3 very significant plays which are related to IPL.
Thank you, Mohit. You mentioned FMCG, and I'd throw this question to Gaurang. Looking at the FMCG stocks in the last 5 days, the enthusiasm does not seem to have rubbed off, whether it is HUL, even Varun Beverages is in the negative last 5 days, Dabur, Godrej Consumers, Tata Consumers, it is Tata IPL. What do you, according to you, do you see the reason of the enthusiasm not rubbing off onto the scripts in the stock markets? Is it the elections, or have they already maxed out in the bull rally that happened over the last 1 year? Also, I'll add one thing to that. We had done something, a study last week, where the FMCG stock and the metal stocks, Nifty Metal and Nifty FMCG, was trading below their 200-day weighted moving averages. So what do you see the reason why the FMCG, which should be basically soaring right now, enthusiasm not so much, at least on the stock prices? Gaurang.
So Amit, on the metal front, I think post the data that we had from China, we had exuberance in the metals pack. And as we all know, more than locally, I think metal sector is driven by global news flows, especially what we hear from China. And of course, what happens in the commodity market as far as ferrous and non-ferrous metals are concerned. Elections definitely has its impact on metal sector as well as FMCG. More so on the metals pack, because infrastructure activity slows down till the time we have election done and dusted and a new government in place. And there again, spending on infrastructure creation starts, cement and metals consumption go up. Real estate sector also has a larger contribution to the consumption of metals and cement, and so does private capex. So that's, and of course, we've had issues with the input cost also as far as numbers were concerned for the metal pack, but that have kind of eased off a little bit and margins have improved a little bit. So we remain positive on Tata Steel, Hindalco, with JSPL and JSW Steel. On the FMCG pack, let us not forget the third quarter earnings was after the erratic monsoon. And we all know what the monsoon was like last year. Excess in some parts, just about normal in some parts, and below deficit in some of the important states, which contributes larger to the agri production. And had said we had an impact. We had palm oil prices from Thailand jumping up to multi-month high. We have issues related to the crude oil prices, which is inched up above $86 on the Brent, $82 on the NYMEX. That has its impact. But even on the FMCG pack, notwithstanding this short to medium term issues, as a brokerage house, we remain positive. ITC, HUL, Tata Consumer, Godrej Consumer, Dabur, Marico, Imami, Nestle, Britannia, if I remember few names. And these are the fundamental coverage that we have. And not to forget, India was, is, and will remain a consumption-driven economy.
All right, that's the word on metals and your FMCG. But Mohit, another segment of the market that is buzzing, of course, and it will be buzzing this week is the primary markets. The 130 crore IPO of SRM Contractors has opened for subscription today. The price band has been set as 200 to 210 per equity share. And I mean, I'm looking at the offer. It's exclusively a fresh issue. I think this, in my opinion, is important to note because all the proceeds from the IPO will go to the company and not existing shareholders. And even looking at the financials, Mohit, the company has successfully demonstrated consistent growth in both revenue and profits over the past few years. Sure, FY23 was a little difficult, but December print was quite impressive actually. I mean, with all this in mind, I know you are very cautious when it comes to recommending IPOs. Is this an IPO on your radar, sir?
Hi Suyash. Look, honestly, I think it's a very interesting play. I'll not mince my words. I also, the way you mentioned, I also like IPOs where the entire proceeds is going for business expansion. I particularly like those kind of IPOs coming out where it is not an OFS and it's a complete book build process where the proceeds will go in newer contracts, improving the working capital cycle, repayment of some debt and other general activities. So I think it's a good, interesting thing from that point. On the business per se, honestly, it's a very niche and a very good play on. Look, so they do nothing very unique. They are into construction of whatever roads, highways, tunnels, and those kind of things. But they are very focused on the Union Territory of Jammu and Kashmir and Ladakh region, and they have a very specialized what do you say, cell which caters to those difficult terrains where they kind of do some tunneling work, reconstruction of bridges and those difficult roads, navigation systems and other kind of things. So it's a very unique and a very territory specific play, right? And they kind of I would not say monopolize that segment out there, but in that terrain they are very well known, and their capacity, the capability is very well defined out there. The company has been steadily growing. Honestly, I would have been happier to see higher growth numbers though. But in terms of valuations, also the IPO looks fairly attractive. I think post the IPO, the valuation should not be beyond around 18 times multiple, right? Which to my mind is good, and compared to the peer group, it'll be fairly cheap also. My sense is this is one which people can subscribe. Even from a short-term play perspective, it should give good listing gains, and it should also be a good long-term play, given the hectic activity which we have seen in the border region, the focus of the governments in those areas, especially in the region of Jammu and Kashmir and Ladakh. Government is extremely focused to do some development activities, to build newer roads, tunnels, and all those kind of things. So my sense is this is a good long-term play.
Okay, now Gaurang, this is the end of the year. It has been a volatile year. The bulls have basically dominated. We had a correction few weeks back. How do you see the coming year for the investors, and what is your advice for them right now?
It's a very difficult make, given the fact that you are in an election year and very close to it. 19th of April will be the kickstart of first phase. 1st of June we'll see the end of it. 4th of June we'll see the outcome of that election. So, and as always, have been positive on the markets, and what we've advised to our clients over the last couple of months is that don't look at the volatility in the market because it's going to be at a elevated level. And I've always maintained one thing, that bro, if you're coming to the stock market, be prepared to digest the high risk that the market will throw at you. If you don't have the capability of digesting that high risk, then don't come to the stock market. But I think I'll pencil down in terms of returns on the index, a conservative 12 to 15% return on Sensex and Nifty for calendar year end December 2024. We might do good in case if the result outcome is favorable according to the thought process what the markets would like to have. And possibly you will see the momentum pick up in the second half once we have a decisive government in place and with the right numbers. Earnings will be very supportive is what our calculation is. And all those FIs and investment officers who have not yet come to the stock market in terms of India emerging market will want to bring in lock, stock and barrel. Who are already here, they will try to bring in more. And the retail participation, Amit, is my assumption is that we will not need to look at those FI flows because we've seen a steady growth as far as retail participation is concerned, whether it is directly into equity market or via mutual fund SIPs or lump sum investments. And this number, my anticipation is going to grow considerably at a higher level.
All right, Amit, got to get you doing some crystal ball gazing out there, Gaurang. But talking about FIs, actually they are back and they are back in a big way. 38,000 crores they have pumped up in the markets this year, this month actually. And a lot of it has to do with the block deals. But as you said, better late than never. On that note, thank you, gentlemen. Thank you for giving us time on News 9. Appreciate your thoughts, appreciate your time.